5 recession-proof stocks to buy in 2020. When a recession hits, everyone is affected economically. There are unaffordable hikes in the prices of products, and even day-to-day living can be so hard. This has to be a long-standing issue which nobody had been able to forecast when it would happen. In my post, When Would the Next Stock Crash?, I explain how impossible it can be to predict an economic fall. The only solution is to get prepared when it strikes. Hello everyone and welcome back to my channel. My name is Antoinetta, and in today's episode we'll be talking about what stocks to go for after a crash in the market. This is especially targeted in September 2020 when the world is going through a recession and battling not to fall into depression. This is my list. What stocks you should be investing in? This is my list. Number 1. McDonald's. This is a company that will continue to stand, be in demand and gain more popularity. Why? Let's say that truly the world is facing a recession. There will be a quick fall in the gross domestic products. This means that many will lose their jobs and their businesses. However, even when this happens, people still need to eat, but of course, they will go for restaurants that serve at cheaper cost. McDonald's remains one of the options that are very easy and simple when it comes to the matter of a quick fix. Apart from keeping their current customers, they will be attracting new customers who cannot afford the high-class meals as before. With over 18,000 outlets in the world, McDonald's continues to spread across nooks and crannies of the earth. This means they have a strong international presence. Buying a share of McDonald's now goes for about $217 per share. You gain a $5 dividend at year of 3.6%. The earnings are about $6.32 per share, which gives them a PE ratio of 23.6%. This is an exceptionally great price for the value of the company. Number 2 on my list is 3M. This company makes products ranging from offices, school supplies, cleaning and healthcare. A good number of these products would continue to be demanded by people irrespective of the situation on the market. 100 years ago, this company paid dividends to shareholders and have been consistent ever since. They have even increased their dividends over the last 61 years. This does not only earn them an aristocrat of dividends, but also sets them in a reputable position in the stock business as the king of dividends. Their dividend payment is at $6 per share at a yield of 4%. Earlier in the year 2020, they sold at $180 per share. Now it goes for $165.66. Number 3 is Walmart. This is a company that has proved itself. The grocery store chain department has had an increase since the pandemic began. At the beginning of 2020, most stocks were faced with troubling waters, but Walmart somehow was able to sell peacefully. This is because they kept producing and selling cheaper products that were affordable to consumers. Although they are predominantly in USA, they are also an international company. Started in the year 1946 by Sam Walton, they earned little popularity. Come 15 years after, they began to spread like wildfire. By then, they already had a total of 181 shops. They continue to expand from time to time, and after another 15 years, they already reached 1,340 stores. As of the year 2006, they were almost everywhere in the US. This earns them an extremely strong advantage over their competitors. You may be eager to ask about e-commerce company Amazon. How would they affect the company? Walmart has remained strong in the market of e-commerce. They have purchased a lot of e-commerce companies in recent years, which has resulted in high growth of about 40 to 60% each passing year. The next one on my list, number 4, is Union Pacific. What are the things you seek in a company that could perform better during the recession period? Are you seeking for a business that is established with a strong historical background or a business model that is reliable? Is it a dividend that is consistent? Union Pacific has got you fully covered. Established in the year 1969, they are a publicly traded railroad company. They perform services that are essential such as coal products, automotive, chemicals and agricultural products around the US. Even in a recession, Pacific services would still be required. They also have duopoly in the railing business. In terms of figures, it's very high. Since 1999, there has been a constant increase in their cash flow and dividends. It is a good conclusion to say there is safety in their dividends. In the 2008 housing bubble crash, there was an increment in their dividend payout from 180 to 150. Their price has fallen reasonably, but they have got a dividend yield that is stable at 2.7%. And on the 5th position, I'll put gold. This may probably be the best investment that can be employed when you want your portfolio crash proof. During the bubble crash of 2008, that latest months, the gold price never dropped. Actually, it increased at a certain period. The value was doubled in 2 years from 720 points to 1,790. Gold is a safe haven investment and comes in 3 different forms: gold futures, gold options, and gold itself as investment. The last option always comes with additional fees for storage. I'm not buying gold for now. I prefer actual individual stocks, but many professionals highly recommend gold for recession-proof investments. And finally, it is essential to know these 2 things. Even if you purchase the most recession-proof stock, it will still go down over a long haul during the recession. This means it's only an extremely uncommon businesses that will go up when the economy melts. Not that businesses will not go down, but would not be as affected as others. Gold is one of these businesses that will never get badly affected even in the worst points of any recession. We are all in the search of a way to keep earning money from our investments. It is inevitable to have a market crash, so the best solution is to go for stocks that can survive the test of hardships. If the 2020 pandemic has taught investors anything, it is that there are certain things more essential than people realize. This knowledge is what you should harness when choosing your stocks this September. Well, I sense you are keen to know which knowledge to harness, right? Stay tuned in my next post for it. If you would like to see all the great stocks for September, subscribe to my channel and you can check out my post stocks to buy this August 2020. And now, I'd like to say a big thank you for sticking around with me. Leave me your comments and options and I will reply as best as I can. I'll like and share if you enjoyed the video, and if you want more of this type of post, subscribe to my channel. So, till next time, stay green and motivated.